Welcome to TheoTrade. This is Don Kaufman. May 11th, 2022. There are 12 minutes left inside of the trading session, and this is a trading session to remember. S&P's down another 60 handles. Nasdaq off by the tune of just about 3%. Again, this is a trading session to remember. Are these markets on the verge of collapse? Let me express why this session is very unique from any other sessions that we've seen in terms of the sell side. So it's pretty obvious that the S&Ps are down again, just about 1.5%. There are some very alarming signs, however, on the screen as we come into this Wednesday's cash close. What are they? Let's get right down to business, because what most people are looking for at this point in time is, hey, listen, this marketplace is clearly, it is oversold. It is getting killed out there. Does it really make a difference? Does it? Because in an oversold marketplace, when you're getting close to capitulation, because that's what we're all looking for right now. And I got to tell you, listen, I'm the one here that actually holds on to bear positions. I'm rooting at this point for a little bit of a rally, because I am telling you unequivocally, we are on the edge, people, on the edge. And again, why? So as we're coming into the cash close, you can start to get that feel. Markets, they're just coming off hard and fast. But look at some of the volume, right? Now, this is the S&P futures. This is the mother of all, hedging products out there. Do you realize that we're not even but doing consistently 4,000 contracts a minute? Now, that may not mean much, okay, to many of you. We're like, oh, 4,000 contracts a minute. I don't even know what I'm supposed to be doing, okay? Decent volume, a day like this, at minimum 5,000 contracts a minute, at bare minimum. We should see pumping through at least 10,000 contracts a minute, like a fire hose wide open. You want to feel the fear. Do you feel the fear right now? Because you're watching the S&Ps and they are literally coming off hard and fast. Where's the volatility? It's nowhere to be found. Again, if we're looking for signs of capitulation, let's just throw it all out on the table. There isn't any volatility, which is actually then indicative. There's no fear and loathing in this marketplace. What you're actually seeing isn't evidence of people throwing the towel in. What you're seeing right now on the screen is just evidence of we're just hedging off into the oblivion, like sinking into a warm bath, if you will, of redness in the marketplace. But there's no energy behind the push lower. Again, here we are. This is the first minute that we've seen. And again, I just want to kind of quantify and qualify this. This is the first minute right now since we've seen since the open, okay, that we're actually going to crest to what? To just shy of about 10,000 contracts. We didn't even hit 10,000 contracts. Maybe we bounce a little bit from here. It doesn't make a difference. You got to realize, okay, the situation that we're in. All right, so you don't see volatility raging, and you want to see volatility raging. Why? Okay, how do you capitulate? How do markets crack to new lows? With the VIX, it's just staggering. That's it. It's just, it hasn't done anything. Complete and total stagnation in terms of volatility. We start looking at the volatility futures. Now, to be fair, the volatility futures that you should be looking at are not these 7-day volatility futures. You got to get out there in time. You got to start looking out 42 days, right? Okay, a little bit further out in time. Look at these things. They're down 35 days out. The Junes, they're down 6 cents. Go a little further out in time. Yeah, there's a little bit of a bid under volatility, maybe 70 days out. There's some serious contract size. No one is feeling the fear. Except, of course, when you do look over at the bond market, all of a sudden we're seeing a rotation now back to bonds. Institutions see it, right? We're going out and we're buying bonds. The other thing is, look how wild the reversal is on an intraday basis inside of the US dollar, right? We tanked off the CPI number. Like, again, the CPI number, you're like, oh, you didn't even bring that up. What's the point? 8.3%. No one cares. What do you think we're selling off for? Fed's got to get aggressive, right? The dollar, though, starts to rip. So if you look at this as terms of risk on, risk off, what products are for hedging? The dollar is clearly for hedging. At this point, the bonds are not selling off. The bonds are actually rallying. Why? Duck and cover. Get under your desk and start rocking back and forth. But the problem that we're seeing right now is that we don't have the fear that we need to capitulate. The Nasdaq just lost a few minutes ago the 12,000 level. Did it surge in volume? No. crossed through it like it was just butter. Absolutely nothing here. Okay. And again, you look towards that volume to see degrees of capitulation. In fact, as we're coming into the cash close, just take a look at today's trading session, which, as I said, this is, to me, one of the most serious sessions we've seen yet. And the reason it's so serious, we haven't even done 2 million S&P futures contracts. Not even 2 million. We're going to crest up there. We could explode in the next, 7 to 8 minutes. And we actually trade S&P futures contracts even 15 minutes after the cash close. So the volume could pick up like, hey, this could get crazy. We could see another 500,000 contracts trade, but it doesn't amount to anything. A big capitulation day, you got to take a look up here. Right, this is the last time we actually touched in. I say the last time, but all the way back in the January time frame, we touched into the 42.11. The point that I'm making over here, nothing has a sign of capitulation, and that's why I'm actually asking that question if we're on the verge, okay, of a more substantial collapse. The next and most critical thing about today's trading session, start looking at things like advanced decline line. That ain't half bad. Most of this day, we've actually been in a 50-50. But here is the stark contrast. And what the contrast was the last time you saw Apple down 5.5%. You're seeing the most significant moves at this point in time out of mega market capitalization. The last time you saw a movement, okay, in Apple like this, you got to start looking back at some huge trading sessions. Nevertheless, Apple is off, okay, by 5.3%. Again, it's one of the more staggering days inside of Apple. Here again, mega market cap taking a hit. Tesla is down to the tune of almost a 9% move. Again, and this is Tesla, it's still a staggeringly large move for it. Facebook, again, down over 4%, all right? Everywhere you look on the screen right now, things are not necessarily, okay, getting taken apart, but mega market cap is. And that's why it's actually one of the more dire times in the market. So at this point in time, like, listen, I don't want to sit here and provide tremendous amount of directional bias. There is no directional feel in the midst of this kind of, marketplace. There's no directional feel like, are we oversold? Unequivocally, yes, we are oversold right now. But in markets that are this massively oversold, you want to see people throwing in the proverbial towel. You need to see volume spiking in the S&Ps. You need to see the VIX exploding. I mean, I'm going to tell you right now, I've been doing this for a lot of years. I would have expected the VIX in the 40 handle, not down 10 cents on the trading session. Okay, I can see institutional hedging, but they're just hedging lower inside of the S&Ps. The volume is picking up right now, but it's picking up into any closing session. The bonds look defensive. The dollar looks defensive. Oil has gone to the moon again, up 5.5%. You show me something on the screen that says capitulation. Hey, I'm all over it, except I don't have an answer to that. I don't see capitulation on the screen. I see nothing but risk. We could talk about then some of the crypto markets, which are getting decimated once again, cracking through the $30,000 level today. All right. In sympathy predominantly with what you're seeing inside of the Nasdaq. Again, the Nasdaq at this point in time, though, all right, on a year-to-date basis, and it's worth looking at this, we're now down close to almost 30%. The S&Ps, and everybody will be talking about it, we're approaching full-blown bear market territory. What to do at a time like this? On a day like this, I'm not even necessarily selling any premium. I'll tell you right now, I've only traded, 6 different positions. I just covered. When I say covered, I bought back positions that were profitable, closed a couple of 5 lots of calls, closed a couple of bond puts that I had sold, right? That's it. I'm not going on the offense over here. At this point in time, maybe a little bit more defensive. Again, the fear is we just lost the 4,000 marker inside of the S&Ps. Again, even being a bear, you almost have to root for a little bit of a relief rally, possibly even get back all the way to the 42.11. But the stark reality of the situation, you don't have any levels lower than this, neither do I. Okay, we're out there. I mean, the markets is just dangling off the edge of the abyss at this point in time. We want to see, again, that huge surge in volatility, the huge surge in volume in the S&Ps, right? Even stuff like, the financials, which were up the majority of the day, even they're starting to capitulate to some degree into this closing bell. Listen, last thing I want to mention here the SPX, we have officially lost the edge of the expected move. If we take a look at the edge of the expected move, we're looking at 39.87, 90 seconds left inside of this trading session. We lost it. The key to the remainder of this week is to claw back at or above 39.87. Continuing where we're at right now, as I said, this is a marketplace that's in the edge of the abyss, okay? Take a look at the expected move for, again, just the remainder of this week, the May 13th expiration. We still have a $92 expected move. Volatility, okay, taking off in the near-term options. But 30 days out, again, no one seems to be feeling the fear. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.